Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the Forex data cycle for Monday the 5th of the 4th to Friday the 9th of the 4th 2021. This is the sister video to the flow cycle for the same period. Basically it's our version of the economic calendar. We've modelled tier 1 and tier 2 data and brought them down to discrete single figures. Right, so let's make a start then. So what have we got? We've got T1, T2 for tier 1 and tier 2. We've got the whole of January, whole of February, whole of March, first week of trading week of April, second week of trading week of April, 5th to 9th, right, which is the week in question. Right, so China then, tier 1, -5, -5, +4. Now these are monthly discrete variables, so they stand alone, but the weekly are cumulative. So we got +4, +5, so that's tier 1. Tier 2 then, +10, -4, +11, -1, +2. So the China data cycle then, you can see, is improving from March, and we're now steadily improving into the second week of April. The tier 2 has been more up and down. It started to improve in March again, slight retracement there, and it's now on the up. So that's China. We'll start these, and we'll do the review at the end. Right, so the dollar then. Tier 1, -5, +1, -6, +4, +6. So mixed January to March, and incrementally improving tier 1 April. +24, +36, so very strong January to February. Deterioration March, +3, +5, and now we're on the up again on the dollar tier 2. Right, stop that there, don't go away, we'll write up the next two. Right, we're back. We've got Germany as an individual country, and the EU are the bloc of the 27 nations. Right, Germany then, tier 1, +4, +7, +2, Jan to March, and then we got a weak start in April, -1, -1. Tier 2, +7, +11, +11, so pretty strong tier 2, January to March, 0, -2. So we got a rolling over a slight deterioration in German data in April, and if you look at the Eurozone as a whole, then -6, +13, -2, and then we've got -2, -2. So we've got this weakness in the tier 1 as well in the Eurozone. +5, +6, +14. And then we've got +1, 0, so fairly neutral on the tier 2. So right, shut that down, next two. Right, we're back again then. We've got the yen, the JPY, and the pound, the GBP. Yen then, 0, 0, -2, +2, +2, so pretty neutral to soft January to March, and very slight uptick tier 1 April. +17, +5, -6, +7, +6. So we had a strong Jan. Really, it was rolling over February and March, and now we've got a reasonably strong April. So the JPY data cycle is showing signs of life on the uptick. Pound then, +3, +8, 0, +2, +2. So slight rollover in March to neutral, and we're starting to slowly pick up tier 1. +5, +11, -8, +3, +3. Well, we've got this deterioration in March, and now we're starting to slowly grind back up on the pound data cycle for tier 2. Right, stop that there, next two. Right, here we go again then, the CAD, the Canadian dollar, the AUD, the Australian dollar then. Right, CAD, +8, -4, +6, 0, +3. So So it's sort of a roller coaster Jan to March, and now we're seeing it come off the floor on the tier 1, neutral +3. Tier 2 then, -1, +7, +5, and then in April +3, +9. So notable improvement running through March and into April so far. AUD +2, +2, +600. So improving incrementally, and now neutral for the tier 1 in April. +6, +8, +15. So significant improvement January to March, and now we're starting to ramp up in April. So +2, +5. Right, last two coming up. Right, last two then. New Zealand dollar, NZD, Swiss franc, CHF. Right. New Zealand dollar then, +2, +2, -400. So we've got deterioration in March from a fairly steady low base in Jan-Feb, and we're neutral on the tier 1. Tier 2 then, -2, -7, +2, -4, -4. So you can see that the tier 2 in the New Zealand dollar has been pretty soft and is staying soft. Right, Swiss franc then, 0, +2000. So pretty much neutral all the way, tier 1. Tier 2, -2, +11, a strong February then for tier 2, -1, +1, +4. So we're starting to see a bit of improvement incrementally for tier 2. We'll stop it there and we'll do the analysis there. Don't go away. Right, welcome back again. Right, if you remember the actual flow cycle, if you look at the sister video, but we can basically pick it up here. Last week for the period then, the 5th to the 9th, basically we had the pound as the opposed negative driver at -574 for the week, and the euro and the yen were sucking up the positive flows pretty much equally. Euro +365, yen +323. So you got pound weakness driving this last week, with euro strength, yen strength, and the dollar at -114 was the negative rock. So the dollar was sliding relatively slowly. So the main feature of the week was pound weakness, euro and yen strength, with the dollar slightly coming off effectively during the week. Right, so let's have a look at this in terms of China then. So China, we've definitely got a situation where the China data cycle is on the up. The dollar data cycle is on the up as well. Germany arguably they're on the down. The Eurozone is starting to soften as well. Right, so the yen is starting to perk up in terms of data cycle. The pound is starting to perk up. The CAD is definitely starting to come up, and the AUD is definitely starting to come up. Right, what's happening with the New Zealand dollar? The New Zealand dollar is soft, and the Swiss franc arguably is coming up slightly, neutral to coming up really. So that's where we are in terms of the data cycles. Now, if you look at the overall sort of a macroeconomic flows and what have you, you can see that right, we're into the second quarter now. So we're into the second quarter. Basically April, May, June. July is the China anniversary of the People's Republic of China. China's got this greater than equal to 6% target for GDP. What else have we got? We've got geopolitical issues. So geopolitical political risk, Russia, Ukraine. That's likely to feed into oil. So you're likely to get a right, and bearing in mind the oil market has been subdued recently. It's gone into this sort of like low volatility wedge. We've had the OPEC issues. Oil's likely to come up. That's likely to have a beneficial effect on the CAD, probably, although you know there is a link there. The AUD is likely to benefit from this China issue. What else do we know? We know that the dollar, in a normal sort of go risk on environment, the dollar normally comes off, which is compatible with the sort of risk on flows, and so we've got the dollar's likely to come off. The euro is likely to be neutral to default rising because of the dollar coming off. And the positioning is such where that's favourable. The yen is likely to get an equity transmission softness. So and that's where, and so all roads sort of point to a bit of euro strength, and the pound has been sold off quite heavily. If you remember, it was it's lost, what is it, 500 and what was it exactly, 574. So minus 574 points this week in the majors. So nearly 600 points has come off the euro, pound, pound dollar, pound yen. So, and we're likely to see with this scenario, we've got a soft dollar, a soft yen, a neutral to strong euro. Therefore, it basically points in the majors that positive flows are likely to come back into the pound. So the pound is likely to come up. You've got this general sort of scenario of risk on. You may get a little bit of geopolitical risk through the oil market. And you're likely to get CAD and AUD starting to fly in the next week or so. And that's how we're positioned. Arguably, so you're saying to yourself, why isn't the NZD? Well, the NZD is already pumped. It's at 67% of the modelled, from the modelled floor. Particularly against, so the NZD, particularly against the euro, the pound, the CAD and the AUD, they're about 85% off the model floors. So the New Zealand dollar has got a lot of elbow room to come off. Its data cycle is deteriorating, whereas these data cycles are improving. So all roads sort of point towards our trades, which were shorting the dollar against the euro, the pound and the CAD, and we're shorting the New Zealand dollar against the euro, the pound, the CAD and the AUD. Arguably, it's been very sticky. We've taken the opportunities to sort of scale, and we're now running sizable positions in these trades, and it's like a broken record. We keep thinking this is going to take off. Well, hopefully we are going to start to see this macro economic scenario start to bear fruits, and our trades to radically improve in the coming weeks, and fulfill this sort of strong second quarter scenario which we've been going on about. So hope that was useful. Try and catch the flow video, which is the sister video. If not, thank you for watching, and I'll see you for Monday for the daily briefing. Thank you.